It's great to see you again after a very, very long year last year. I'm excited to be here with everyone today. Thank you so much for joining us for today's program on starting and managing a small business. And today we are going to be diving into a lot of the information, the tools that you're going to need, some of the resources you're going to start needing to put together now if you are thinking about starting a small business here in the city of St. Louis, or really just overall in the state of Missouri as a whole. Before we get started, I see we have a nice forum of attendance here. Angela always gives me a beautiful introduction, but just to let you all know a little bit more about me, my name is Amina Abdul Malik. I am one of the business development counselors with the St. Louis Small Business Development Center. My office is actually located in downtown St. Louis in the T-Rex building. And if I can ask you all today, has anyone ever heard of the Small Business Development Centers before? Feel free to answer in the chat or even use the raise hand feature. But has anyone heard of the Small Business Development Centers before? Okay, great. I see Charmaine has, Sean has not. For those of you who have not heard of the Small Business Development Centers, we are a nationwide support network for entrepreneurs like yourselves who are looking to either start or grow an existing small business. And we help entrepreneurs with one-on-one, no-cost counseling, as well as training programs such as this one. We assist business owners or future business owners with things like registration, business planning, marketing strategy, strategic planning, getting access to capital and getting you capital ready, helping you understand how to manage your accounting systems, helping you better understand financial management and reading financial statements. So all of those things are up the Small Business Development Center's alley. And we also work with a lot of the other, or most of the other support organizations that are here locally and even on a federal level that exist to serve entrepreneurs as well. My background is also in small business. I come from I have a bachelor's degree in business administration from Harris Stowe, as well as a master's degree in finance from Webster. So my background has always been business. And so I'm very, very passionate about what we do here and speaking with you all today about the first steps you all need to take for your small business. I see Bruce has his hand raised. I'm not sure if I can quickly, and what I would like for us to do as I'm figuring out the hand raise here, I don't want to, we only have an hour and a half, and this presentation has a lot of information in it that I would love for you all to be able to take with you back into your company. So I don't want to take a bunch of time for introductions verbally, but I would love for you all to take a few seconds to briefly introduce yourselves in the chat. If you could just let me know your name, what brings you into class today, if there's a little nugget. Oh, I'm sorry, Bruce. I see that you raised your hand about the SBDC. Okay, great. I'm glad that you've already heard of us. Thank you. But if in the chat you could post a little bit of information about your business, how far along you are in the process, and what are some of the things you feel like are your major challenges or things that you need to know. I would love to kind of hear that information from you all as we're getting started. So let's jump into the agenda for today. Today's agenda, we're going to be talking about a bunch of different topics, but we are going to start by the first decision that needs to be made when you're just thinking about business ownership, and that is understanding what goes into owning a business and what risks are associated with business ownership as well. Then we're going to talk about my favorite part of business planning, which is the actual planning phase. We're going to talk about what it takes for you all to start planning for your business, the different tools that are available for business planning, and how important the plan is to your overall success for your company. Step 3, we're going to discuss funding your company, what it takes to fund your business, to fund your idea, the different types of funding that there are, whether that be traditional or non-traditional. We're also going to talk about the different types of legal business structures, also choosing a name, what goes into choosing a name, the different options you have for naming your business. And then we're going to close out on the other aspects of your business startup, which are your registration, your licensing, and your taxes. And thank you so much for that introduction, Pam. You're from MD, just getting started, and this is a great place to be for getting started. You'll leave here hopefully feeling more empowered to take the next steps for your company. And thank you also, Sandra, for the introduction. You have a management consulting company. Oh, and let me tell you, management consulting and professional services right now, data entry, I could use some of those services and need to hire your company as a contractor for all of the data entry that I have to do for our organization that's due. So thank you so much for joining us, Sandra. And then Sean, thank you for the introduction as well. You're in college for business admin, so you're about to have all of this knowledge under your belt soon as well. But you are an Army vet and wanting to start your own power wash and mobile detailing company in Hannibal. So you've already purchased some of the equipment, which is good, but you just need some help making the business legitimate. And Sean, I would love to talk to you. I will be sure that you all have my email address and my contact information after class, so that if you're interested in scheduling a one-on-one, I can also see what SBDC counselors we have a little bit closer to Hannibal, Missouri, because I know we do have some counselors out there that you can also meet with potentially to ask questions about how to potentially structure that business to make it actually a legal structure and a formal business as well. But thank you so much for joining. So step one, let's talk about small business ownership and what goes into making the decision of owning a small business. When you're thinking about small businesses in the United States, understand that small businesses make up our economy here in the United States. So small businesses make up over 99% of the firms here in the United States, but small businesses are risky. There are more small businesses that are opening than closing over the last several years, not including these pandemic years, which we're still waiting to receive statistics on. But 20% of those businesses that open, that have employees, actually still will fail within the first year of business. Only half of the businesses that start actually make it past year 5, and only 42% of small businesses, 42% of small businesses will fail simply because there is no market, and 29% of those startups fail because they simply do not have enough cash. So we can see from these statistics that come from the Labor Department that say that small businesses are very, very popular in our economy, and there are more businesses that are opening than closing, but in the same token, small businesses are very, very risky, and there seem to not be a lot of guarantees. So if we ask ourselves why there is such a high failure or closure rate for these companies, we can come up with a multitude of reasons. And if we look at the slide here, you see the man with his, looking for cash in those pockets. All of these reasons, including poor location, poor inventory management, unexpected growth, overinvestment into fixed assets that don't move, having inadequate records or financial knowledge, all of these are the most common reasons why startups may fail. But if you look at this list, everything on this list could be eliminated or mitigated by the first bullet point: inadequate front-end planning. So having better planning or poor planning is the number one reason for failure. So everything that you see here on this list could have been prevented with a better plan. And that's not to say that the plan will not change, because the plan is only as strong as how quickly it can be adapted. So your plans will change, but you still need that structure, that organization and plan to be able to make your business successful or have the best chance at success, I'll say. And Charmaine, thanks for the question. Will we get a copy of this presentation? Yes, I will share my email address so that you all can email me to get a copy of it. I'm not sure if I'll be getting you all's email addresses after this, but I will make sure that you are able to get a copy of the presentation, Charmaine, yes. So let's talk about how we can mitigate and eliminate some of those challenges and some of those potential reasons why your business may not be successful. And that will all start within the planning phase. I know that in the future, and Angela will be showing at the end of the presentation some of the different class options and different workshops that they have upcoming as well for you all. And I know that we do also offer a business planning class, which will dive a little bit deeper into the components of your plan and how to actually construct one as well. But you have to start off with a plan. And before you can even begin to write a business plan, you want to start off by evaluating yourself. There is several different self-analysis checklists that you can use that I can provide you access to as well that will help you identify your strengths and weaknesses and where your opportunities are. And just because you don't have a skill in your toolbox, that doesn't mean that you can't start your business. It means that you need to start planning and determining how you're either going to obtain that skill over time, which could either be by learning it or by hiring it, or you need to start understanding or figuring out how you're going to prop up that potential weakness as well. So everything starts with the self-evaluation. What are my strengths and weaknesses? What do I bring to the table in terms of tangible value? After you've done a self-analysis, you can then start to evaluate the market and industry that your business will be entering. So when you're moving past the self-analysis, there's several different ways you can start the planning process and start to evaluate the market you're going into. One of the approaches, and all of these approaches are designed to do one thing, which is to conceptualize your business idea and actually validate the concept of your business before you start all of the detailed planning. So these initial steps in your evaluation are meant for you to determine the feasibility of your idea and save you from wasting your time and effort on an idea that may not actually be feasible. So whatever approach you take, and I won't go into the different approaches, we have one that we typically use called the business model canvas, which helps to create a visual business model graphic, but you do need to do some form of market analysis for your business plan. After you've analyzed your market, the next step will be to analyze how much it's going to take to start your company financially, or how many cash dollars it's going to take to open your business. And then you'll also want to determine how your company's cash will flow from a month-to-month basis, or how much actual tangible dollars will your company have on hand to be able to for just running the business, regardless of if your company is making money or not. And then finally, the final part of the planning, the last part of the planning process is understanding how you're going to source the funds that are needed for your company, or what those sources are, and then a description of how you're going to use those funds for your company. So let's say, for instance, you say that you need $10,000 to start your business. Well, where is that $10,000 coming from? Are you going to do a 10% equity injection of $1,000, and the bank's going to loan you the rest? And then also, where are those funds going to be used? Are you going to use $70,000 for equipment, and then the remaining $30,000 for working capital? All of those things are things that are going to need to be described when you are creating a business plan. Now, several different components in the business plan. I've seen over 100 different business plan templates in my time with this organization, but there are, there's numerous different outlines, but every plan will address the 4 basic topics that are shown on the slide right here. Number 1 is going to be the business description. And the business description is basically describing the why behind your company. And the business description is also like the hypothesis for your business. It describes your value proposition or what your promise is to your customers. It describes the problems that your customers are needing to be solved. It also will describe the legal structure of your company, what products or services your business is actually going to offer, and it will describe on a base level why your business is going to be profitable in the near term and as well as the long term. So the business description is where you describe everything that you're trying to do within your company and that you're trying to accomplish. And then the rest of your plan essentially must prove that you can achieve that hypothesis that you describe in the business description section. The next section is market and customers. This section of your plan is all about the who behind your company. And in this section, you will be describing the market or industry that your business is entering. And let's say, for instance, if you are opening a bicycle shop, you are in the transportation industry. And also within this section, and this is a very, very important part of your business plan, is going to be your target customer section. And this section is where you will describe and identify who your ideal customers are, what is important to those customers, and also you will describe how you're going to let them know that your business is the best solution to their problem in this section. So the market and customer section is all about you describing who's consistently going to find value in your product or service. Why are you selecting these customers as your target groups? What similarities do they have? And the reason why you segment your customers is you can sell to everyone, but you cannot target everyone. The more information you have about your customers and their buying habits and what makes them purchase things and when, the easier it is for you to design your business around their needs to be able to best be the solution to their problems. The third section of the plan, the operations, the organization and management section. This section explains how you're going to control and influence what happens in your company, excuse me, and who's going to do the different role, or who's going to handle the different key roles within your business model. So in this section, a little bit more of the dry facts about your fit business. What type of legal structure is the company? Who are the key individuals or roles that are going to help you run the company? That is everything that kind of belongs in that operations and organization section. And then finally, the last component of any business plan is going to be financials. Let's get to the nitty-gritty. How are we paying for this? And in the financial section, you will find your list of startup costs, and this list needs to be detailed. So you'll have a list of startup costs in there. You'll also have your break-even point, which is exactly that number you need to either sell in units or in dollars to actually cover all of your expenses. And then also in the financial section, you will have your financial projections. And those are projections of your future financial performance based on different assumptions, based on different feasible assumptions, let me say that you make about the nature of how your business will operate. So the three different financial statements that you will create will be the profit and loss statement, which shows you how much your company made and how much your company spent over a period of time. And then you will also have the balance sheet, which shows how much your company owns and how much your company owes at a moment in time. And then finally, the cash flow statement, which shows how much cash on hand or liquid capital you have on hand at the end of every month. So those are the three statements that you will also create as a part of your business plan. And that essentially, these four components, you will see in every business plan template, no matter if they use different language or things like that. Now, to get started with the planning process, you want to start off by getting as much information as you can about your market. And the market is an industry is kind of the larger level, sky that the market falls in, or the market falls out of, essentially. So your industry exists to serve a particular market. So your industry is that broader scope, that wider level, and then the market is that subset that you're in. So an example is the music recording industry, which has various different markets within that industry. So you're in the music recording industry, but you could be in the production market or the engineering market or the distribution market. So there's different markets that are within these different industries. And of course, every different industry has its own characteristics and trends and requirements that you as the business owner that are entering those industries need to understand. And the next component of market research really is the market. So if you are moving into a physical market and it's an actual location, you want to understand where the majority of your customers are in relation to your business, whether that be in distance, drive time, or something else. You want to understand how many customers are available in the areas that you're going to be doing business in. And you want to have that same methodology, even if you are operating or wanting to start an online company as well. No, you're not selling out of a physical location, but you still need to know where your ideal customers, where are they online? What spaces are they in online? Where are they shopping for things online? Where are they looking for services online? And internet sales do make identifying your market area a little bit more complex, but it's still a very necessary part of the process. When you're thinking about competitors, please, 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 one of the biggest things to remember about competition is that your competition as a startup is not just who's providing the same exact thing as you are, but your competitors are anyone who is solving the same problems as you with your solution or a different solution. And so you have to find a way to be better than your competitors, and those ways that you are better have to be actually important to the customer. So an example of that is, well, two things I want to note on this statement here. So what I mean by that statement of your competitors are anyone who's solving the same problem with you with a different solution is, let's say, for instance, you are operating a tutoring company, let's say, for instance, and the tutoring company has various tutoring competitors. You have Kumon, you have major competitors, but what are the other things that people who are looking for tutors are doing other than just going to a direct tutoring competitor? They're going to good old YouTube University. They're asking friends or family sometimes. They're trying to learn things on their own. They're going to the library maybe. So you want to think about all of the different ways that your potential customers are typically trying to solve those same problems that you've identified in relation to your business. And also, when you identify the different ways that your solution is going to be different, make sure that those ways are relevant. I had a client that I was working with who was thinking about how to price and design their consulting service. And they were telling me, and we were thinking about, well, how to price out a 2-hour session. And they were like, well, I don't want to be too expensive. My pricing is very, very good. I'm a little bit cheaper than the competition. And I asked her, I'm like, what if your customers don't care about the actual dollar price, but what if it's about the convenience of working with you or another different component? So understand that price is not just how much something costs when you're thinking about competing. It's about the effort that goes into interacting with that product or service as well. But that was a small tangent on competition. But overall, competition is going to also be a very major component of your market research. A couple of different topics to start market researching, or ways to kind of get started with market research. And this is one of the places where I will plug Angela and her team at the library. they have access to a bunch of different databases and clearinghouses that have access to a lot of this market research information that you may need for your business plan. So I would definitely keep in contact and reach out and check out the library website for some of that information as well on the databases they have for market research. But there's two main areas that you can start to try to use when thinking of and researching your customers. So the first one is demographics. You want to understand what's going on in your market area and what's going on with the potential customers that may find value in your product or services. And you want to try to group those customers based on those similar traits. So when we're thinking about demographics are subsets of a target market that share particular attributes. So demographic traits are those traits that are things like age, sex, family status, education level, income, occupation, or even race. So the demographics are those drier facts about your potential customers. So you want to start to try to identify what demographic traits do my ideal customers have. Then after you've identified some of those demographic traits, you then can dive a little bit deeper into the psychographic traits that those customers have. And psychographic information includes things like, or traits like your buyer's habits, what your buyers value, their buying behaviors, their morals, their lifestyles. And so the demographics explain who your buyer is, and then the psychographics explain why they buy, essentially. And finally, as we wrap up market research, these are 7 great questions that you can ask yourself to try to help you come up with your target customer segment. Now, do understand that typically businesses will have more than one target customer group. And so let's say a person who owns that bike shop, they may be targeting one group of individuals that's 25 to 35 that has at least an income of $50,000 a year, that likes the outdoors, that has active lifestyles. That's one group. They may also have a very, very attractive group of seniors or older adults over 50 who still want to live an active lifestyle, who maybe have had previous athletic experience. And yes, they're selling the same product to both of those groups, but how they advertise, promote, communicate value about those products is completely different. And so that's the reason why you segment your customers, and you can help yourself to find these different segments by asking yourself these 7 questions that you see on the slide here. So the first 4 questions: who are they? How many customers are there? How much do these people spend? How often do they spend? These first 4 questions will help you identify the potential business that exists in your market area and how many potential customers you will need to actually serve. And then the last 3 questions: how do they make a purchasing decision? How do they find value, or what do they value? And then what or who influences them? Those questions are going to give you the basis for helping develop your sales projections and understanding those target customer segments and understanding what your value proposition is going to be for your customer, or what your promise is to them. Any questions about market research before we talk about funding? All right, so now we get to the part where when I'm working with clients on a business plan, and that is something that we also do at the SBDC. I work with clients very, very frequently through a business plan. I typically take it step by step. We kind of go through the sections together. And when we get to funding, typically, here's when it sometimes gets a little tricky, and I start to see the sweat come off of my clients' foreheads in our Zoom meetings. But when you get to this step of the planning process for your startup, it may be overwhelming at first and challenging, but you will leave this section either knowing that the business isn't feasible anyway, and it probably was best to not be started, or you leave it feeling empowered to take the next steps because you'll know everything that you need to spend and everything that you need to make to potentially be successful. And then before I get started here, Megan, I see you had a question about market research. Great question. What are the best resources for free or inexpensive info? You have two of them on this call right now, Megan. Both your local library, so the county library system, they have an excellent market research department and even librarians that can maybe try to assist you with your market research efforts. And also myself and my team at the Small Business Development Center have access to similar databases and resources. So I can also order market research for you to try to help you understand more about your customer demographics or even your competitors as well. So really, I'm not just plugging this, but if you say free, you don't really have to plug free anyway. I would say that the libraries, also the local chambers and government as well as the Small Business Development Center will be great resources for free or inexpensive info. No problem. Thank you. So talking about funding, in the first few years of operation, the dollars tend to flow from your business owner, which is you, into the business. So typically in those first few years of operation, the owner is plugging and injecting funds into the business for it to operate. And because of that reason, operating in a new business involves a great deal of risk. And so not having enough cash is, you saw that on that first slide there, it's the second most common reason for a startup to fail. And due to poor planning, which was another reason that was up there, many new business owners, they oftentimes underestimate the cost of starting and operating a new business. And so there are four major costs that you typically want to determine in order to know how much money it's going to take for you to start and keep your business running in the early years. The first cost that is associated with starting your business is just that, the startup costs themselves. So these are all of the costs associated with doing business and getting ready to, quote unquote, open the doors for your company. So you want to consider your startup costs item by item. I actually have a spreadsheet with different startup cost categories that I can also share with you all that helps, because it will help you not forget any of those different startup cost categories. But you want to be as thorough as you can when you come up with this list, because that number will be everything you need for you to get up and running. Let's think about an example, a doctor's office. What do you see when you think about a doctor's office? I think about the waiting room per se, which is where oftentimes I spend a lot of time, but past that, you may think about equipment, x-ray machines, scanners, large pieces of equipment, but you might not think about that printer or the stapler or the paper that's needed in that office space. You want to, when you're thinking and creating your list of startup costs for your company, be very, very inclusive about all of those different items, because the more accurate you are in the beginning, the easier it will be for you to just live out the information that you are putting in that plan. So your startup costs will include any legal and professional services you need to pay for to get that business up and running, utility deposits, equipment you need, any software, furniture, fixtures, initial deposits, if you're prepaying insurance, any of those prepayments are all included in that list. So once you get your startup costs, you will then add those startup costs to your initial operating expenses. And the new business owners, you always want to consider those reoccurring expenses that have to be covered no matter if your business is making money or not. So that is exactly what a recurring expense is. It is those things your company will have to pay for that are not directly related to the revenue of your business. And those are things like rent, if you're renting out a space and not starting your business out of your home. If you get employees, which I do not recommend, and include wages, insurance, as well as utilities as well. So usually when you're accounting for initial operating expenses, you want to account for anywhere between 1 to 3 months of those initial operating expenses in your calculations. The third component of this equation is working capital. Now, when you're thinking of this equation, sometimes working capital can be used interchangeably with the initial reoccurring expenses, but working capital is essentially the cash on hand that you have available to cover those day-to-day expenses associated with doing business with your customers. So if you combine working capital with initial operating expenses, it's okay, but you need to make sure that you're anticipating these expenses as a whole. So typically, in terms of working capital, that will include things like your accounts receivable. Does anybody already know what accounts receivable is? Feel free to raise your hand or type in the chat. Okay, Megan, I see that you do. Accounts receivable is an accounting term that becomes very, very important if you are providing a service or you're doing consulting or any type of service as a whole. And accounts receivable is the account on your financial statement that where all of the money that you are expecting to receive within 30 days sits. So when you're looking at a list of assets, and I'm getting into some financial stuff really quickly, so I won't go down this path too long, but when you're looking at your list of assets, the first asset you'll see for your business is cash. That's how much cash you have on hand. Cash is liquid. Liquid means it is easily converted to something else and is easily spendable, okay? So your cash capital is liquid. Your accounts receivable is the next asset you see, and that's where all that money that you're waiting to receive from that client that says it's going to pay you in 30 days is sitting. If you are running a business and you're operating a service-based company, you really have to make sure that you are keeping your accounts receivable up to date, because what happens when you don't is that money sits in accounts receivable, it never gets converted to cash, and so that eventually messes up your cash flow and also messes up your ability to start other jobs and have money to pay for your day-to-day expenses. Because if you're waiting on that money that you were supposed to receive, that's money that you obviously can't spend. But overall, working capital is the third part of this equation, and essentially that's that cash that you need on hand to typically cover those day-to-day operating expenses, inventory, and also that accounts receivable as well, to cover yourself for that accounts receivable. And then finally, the fourth part of the equation is oftentimes forgotten by a lot of clients, but it is your emergency funds. You never know when some things are going to happen. You can prepare for a lot, but some things you cannot necessarily prepare for, but what you can do is prepare for the unexpected. And there are always going to be circumstances where major, unforeseen expenses occur. That could be anything from a price hike from a supplier or a jump in fuel costs that impacts your transportation business. A new law could increase minimum wage or create some type of new tax for your industry. Zoning changes and laws could occur that make your business more challenging. But so keeping up aware and trying to stay up to date and ahead of the trends in your industry is one component, but also making sure that you put enough money and add enough money in this equation for your startup costs for emergency funding is going to be very, very important, because as we keep talking about, most startups that fail is either due to not having enough customers or not having enough cash. And not including emergency funds in your planning or your funding request is going to be the first challenge that you'll face in that regard. So, I think I skipped a little bit too far here. There we are. Sorry about that. So this is just the sum of that equation here. You have your startup costs, initial operating expenses, working capital, and emergency funds, and that will be the total you need to get your business started. And so what I always tell my clients is you want to overestimate expenses and underestimate potential revenue or sales, because you don't want to be an optimist. This needs to be a realistic estimate. estimate. Typically, funding from a bid for your business will always come in two forms, either debt or equity. Debt is usually obtained by borrowing and must be repaid typically from the cash flow of the business, and equity financing is contributed typically by owners or investors and is usually not repaid from operations. So usually you are the first source of funding for your own business, and I'm sure a lot of you have already put a few dollars at least into your companies for something or another. But past that, your friends and family are oftentimes another potential equity source, but just be careful when borrowing or taking money from those that you know. If the money comes in the form of a loan or not, it is wise to have the terms of that loan or that agreement in writing. And if the money is in the form of a gift, it's wise to obtain a letter to that effect from the donor. And in fact, lenders down the line may ask for some of those letters when evaluating a future loan request for your company. So debt financing sources are typically loans from a bank, economic development corporation, or a government agency. And in order for you to get access to a bank loan, you must show that your business plan is feasible and sound. There are obviously SBA-backed loans, which are typically much more advantageous for you as a business owner than just a regular business loan, because the SBA or federal government guarantees a portion of that loan, which makes it less risky for the banks to give, and is why those SBA loans are a little bit more attractive. But those aren't the only funding sources. Those are just the traditional ones. Other funding sources can, of course, include private investors that will either ask for equity, which is ownership in your company, or debt, which is payback expected on their terms in some case. There is crowdfunding now, which does have an expectation of paying back. Crowdfunding is where you ask for individuals to fund your idea. You have supplier credit. There's home refinancing, life insurance policies, but none of these are really ever recommended because of the risk of small business ownership. Now, you often will hear about grants, and grants are seldom going to be a funding source for a for-profit small business. I've been with the Small Business Development Center for over 4 years and never have seen just a client get a regular grant as a for-profit company. However, that does not mean that there are not any grants out there. I've seen clients get grants, but they typically, when you are looking at a grant, that is money that is given by the government, an organization, a corporation to get something done that is important to them, and which is rarely just for a traditional business startup. So grants are not free money. There is a lot of reporting and tangibles that have to be provided when you receive grant money. So just don't have the expectation that grants are a traditional method of financing for a for-profit business, but obviously that does not mean that they're not out there, but they are typically reserved for very specific industries like technology, social services, and things like that as well, or public policy issues. But another thing that the library has access to is information and resources on finding grants and how to access the websites or programs that have those grants available on them as well. Since small business is very, very risky for banks, and because small businesses have such a high risk of failure, banks are very cautious when they are considering a business loan. And your loan application is going to vary from bank to bank, but all of the loan applications will essentially ask for the things that are on this slide. So you will be interviewed as the business owner if you are applying for a business bank loan. They're going to perform a credit check and analyze the financial data that you provided in your business plan. But past that, they will look at the financials. They'll look at how much you're requesting. Does it make sense? Are you requesting $500,000 for inventory for an ice cream shop? They also will look at the detail of how much funding you are requesting. They'll also look at where you're saying that the money is going and how you're going to use those funds. And when you ever see that term pro forma is essentially just an accounting term for projection. So like I stated, they're going to look at your business plan and look at your financial projections that you come up with before even running the numbers through their own internal system. So when a lender is reviewing financial projections, they're going to want to see at least 3 years. That's something that my counseling team also assists with. If you're working through a business plan, we will definitely help you with creating your financial projections as well. Oh, I'm sorry, my mouse is I need a new mouse this year, and that'll be something I order sooner than later. Also, if you do plan to buy equipment with any financing that you receive, the bank or lender will definitely want to see documentations of the items that you're planning to purchase, as well as those costs associated with those items. Before we move on to the next part of the next section of the presentation, I want to quickly give you all a little bit of insight into what goes into a lender's thought process when evaluating a loan request. And so there are 5 different C's of credit that lenders will evaluate when taking a look at loan requests for a small business. And the first one is cash. What is what is your equity contribution to this loan? Although there's going to be a lot of different factors involved, the expectation for any SBA-backed loan is that the equity contribution is typically going to be anywhere from 15 to 25% of the total funds needed to start the business. However, I have seen clients that were able to get equity injections as low as 10% through an SBA-backed loan. So that all depends on the bank, the risk of the loan, the amount, and several different factors. Also, a lender is going to want to evaluate your capacity as the business owner and the business's capacity as well. Does the business have the ability to cover its expenses solely from the sale of its product or services? So those 4 demographic customer questions that we talked about, who are the customers, how many there are, how much do they spend, and how often, will kind of help you get the data to provide and project for your capacity. So lenders aren't going to expect you to be profitable from day one, but your research and your plan will demonstrate that you will ultimately have the necessary capacity to be successful. And your plan and projections will also show the moment which that profitability will occur, which typically will be before year 3. And so when you're creating your business plan and projections, and you know you're going to be requesting a loan, we will build those financial projections with that loan request in mind. The third C of credit is collateral. If you can't pay back the loan, the bank wants to make sure that they have something else, another asset of yours that you pledged that they can get their depositors' money back with. So inventory and other business assets are typically going to be valued much lower than what they're actually worth. So collateral is typically going to be things that you personally own. So that's why another reason why small business and as a whole is risky, because you're still the owner, and even if you're managing an LLC, you're still the owner of that company. And so your individual items will eventually be at stake. And then finally, the last 2 C's of credit are the conditions of the loan. What are the terms of the loan? Does it make sense for the bank? And then finally, the character of the business owner themselves. So that's all about you. What is your personal history of handling money? What's your personal credit score? Do you have any bankruptcies on file? And of course, obviously, they'll want to know about your knowledge and skills and your background. What's leading you to believe that you have the capabilities and the skills and abilities and knowledge to actually operate a company within this industry? So step 4, if we didn't have any questions about the financials, this section is one that I get a lot of questions about when working with startup clients. And there are a number of considerations to consider when thinking about selecting a legal structure. But the biggest things to consider when thinking about selecting a legal structure are the risk of being sued, the simplicity of operating the company to reduce time and cost, and the tax implications of operating the legal structure. Because of liability and tax implications, none for most people. Well, let's just jump into the slide. I was going to kind of give a review of the LLC, but we'll kind of get into that in just a moment. But the legal structure you select for your company will affect your liability, taxation, as well as accounting. And Sean, I see, will the SBA be able to help find a private investor if that option is on the table? I may have a list of, when you say private, I would want to know what you mean by private. But we don't necessarily have a list of private investors since we are an SBA facilitated program. So I have access to SBA lenders, but I only have, and what I'll say is we don't work for those banks. And so when we refer you to a lender, we don't have access to your application or anything like that. It's just a referral based on who we've worked with in the past, who we've sent clients to in the past, and knowing which banks are more likely to take certain deals. But we could have that same conversation about private investors, but I may not have as much knowledge and information to support for that. But would love to still chat with you about it. So your legal structure for your company affects liabilities, taxation, and accounting. And so we're going to talk about and review each of the different types of legal structures, and I'll briefly highlight some of the advantages and disadvantages for all as well. And Sean, let's have a one-off about that, because you're right, the SBA, and I can kind of walk you through the SBA site and we can take a look at it together, maybe set up a one-on-one, and then you can maybe show me what link you're seeing and we can kind of go through that together as well. But the SBA does not necessarily invest in things themselves. They back and facilitate and pay for different programs. Okay, great. So first legal structure is actually the most common form of business ownership in the U.S., and that's a sole proprietorship. So a sole proprietorship is just a business that's run by an individual or a married couple. If you have done any business without formally registering a company, you have essentially been a sole proprietor yourself. So organizing a sole proprietor has all of the advantages that you see here. There's just one owner, so all the profits come to you. The profits are only taxed once because they're just your ordinary income. The owners are free to make all of the decisions. There's no organizational costs really, unless you register a fictitious name for the company. And it's very simple to organize because it isn't a formal legal structure. But there are some disadvantages. If we don't want to end up like the gentleman here on the slide, which is how I almost felt this morning when I woke up, we have to make sure that we're thinking about all of the disadvantages and the ramifications of having a sole proprietorship. Because a sole proprietorship does not have any separate legal status, there is no separation from the business owner and the business. You are the business. And because of that, this lack of separate identity creates extreme liability for you as the business owner, or unlimited liability for you. And that is the number one disadvantage of managing your company or operating your company as a sole proprietorship, is that unlimited liability. The owner, you as the owner, is going to be personally responsible for all obligations, debts, and other liabilities. And there's no separation between you and the company. So that means that you could personally lose things that you own in those personal assets due to a negative judgment against the business. And there's really not much insurance available that is cost effective for a sole proprietorship, because who wants to cover a non-legal entity? Also, a sole proprietorship is typically going to be relying on the owner's financial assets or people they know, and their ability to raise funds for the business or expand, because you're not going to have access to those traditional forms of lending or investment because you don't have that separate legal status for the business. Now that leads to the best practice and typically the recommended legal structure of business for most single member small businesses, and that is the limited liability company. And the limited liability company is a great blend of a sole proprietorship. It blends the advantages of a sole proprietorship with the advantages of a corporation. And the LLC provides limited liability to the owners of the company because it puts a veil over your face as the business owner. So the LLC is a separate legal entity, and because it is a separate legal entity, you as a member are only going to be responsible for debts up to the amount of your investment. Now, if you're the sole member or the sole owner of the LLC, yes, you are on the hook for all of the LLC's debt. But what it means is you are, let's say, if there is a negative judgment against your LLC and you are the owner, your personal assets are not automatically and directly impacted. The business's assets are automatically impacted. Now, if you never deal with and handle the negative judgment of the business, then yes, you are still the owner of that company and they will eventually come for you and your personal assets. But you in the beginning, if anything happens negatively to the business, you have that protection and your personal assets will not be initially impacted. So that is the number one benefit of the LLC, is that having a separate legal entity, which gives you limited liability. The other major benefit is the simplicity of operating an LLC. Unlike a corporation, which is the last one we'll talk about here in just a moment, unlike a corporation that has to file annual reports and have a board of directors, an LLC, you can have an unlimited amount of members, which are the term that they use for owners, but there is no extra filing that needs to be done on a year-to-year basis, or really on any basis related to your LLC. And finally, the last advantage is that an LLC is seen as a pass-through entity in relation to the IRS. So that means that you're only taxed at your personal rate, just like sole proprietors are. So there's not any corporate tax rate or anything like that. So it doesn't change anything with your taxes to own an LLC, except you'll add something called a Schedule C, but it's still going to be taxed the same way. Now, this slide could be debatable because there's really not many large disadvantages to an LLC. The cost of registering a traditional single member LLC is $50 on the Secretary of State's website. That's something that I also walk clients through step by step as well. So if you're needing help with registration and making sure you have all the registration you need, that's something we can also chat about on a one-on-one. But be careful and make sure that you do register your LLC on the Secretary of State site and not in their office, because it actually costs double the cost to do it in person, and it's $105 to do it in person. But so the LLC, it can be more costly to form than the sole proprietorship, which is nothing, but it's still going to be way less expensive to form this than a corporation, which we'll talk about next. And LLCs cannot necessarily have investors or issue stock like a corporation, and it's not a separate entity for tax purposes. So because of that, you do have that personal tax liability from any income that you report for the business. Now, the C corporation is the most formal type of business ownership and legal structure. It also has limited liability as well. So ownership that's in a corporation is not immediately on the hook, or their personal assets will not be immediately impacted due to a negative judgment against the business. Selling stock is very easy to make. It's easy to transfer ownership because you're able to sell stock. You're able to pay company fringe benefits, but typically corporations are going to be beneficial if you are thinking about having a bunch of employees or several different locations, or you're already thinking about selling stock. Otherwise, typically the LLC is traditionally going to be the best way to go. And that's because when you get into the disadvantages of the C corporation, the main disadvantage is that the profits of your C corp are going to be taxed twice. So let's say you had a good year with your C corporation. What's going to happen is, first, the C corporation is going to have to file a tax return each year to pay tax on the corporation's income and pay that corporate tax. And then second, any profits that are left after taxes are going to have to be paid to stockholders, which you probably wouldn't have, but you're also going to be having to pay personal taxes for your income related to the business as well. So double taxation is the main challenge or issue with a corporation for typical small business owners. And then corporations also do have to file annual reports and pay for those, have those board meetings, and those different regulation requirements to be met. You have to adopt bylaws. And so the cost to form and structure the corporation is actually going to be much more expensive than that of an LLC. A little quick tidbit here about registering your name. There's two different ways here to handle your name registration. So let's say you do plan to register your LLC and you are operating a consulting company. And I think I see a good question here, Dawn. I'm going to answer that in just a moment too. Thank you. So let's say you are wanting to operate a lemonade stand, okay? But you don't think that John's Lemonade Stand is probably a professional LLC name that you would want to use in contracts. What you could do is register your LLC's name. And let's say, for instance, this client registered their name as Missouri Lemonade Manufacturing. And then you could use something called a DBA or a fictitious name. Those two terms are the same thing, just interchangeable. Excuse me. Those two terms are interchangeable. So if you hear DBA or fictitious name, that's the same thing. You could also register a fictitious name for, let's say, John's Lemonade Stand, which would allow your business, and that fictitious name would be owned by the LLC. And that would allow you to do business as John's Lemonade Stand in marketing, in your website, when you're talking to customers. And so that's what a DBA or fictitious name does. It allows you to be able to use another name instead of the actual formal name of your LLC. Keep in mind that a DBA does not give you IP protection. It does not make that name intellectual property. So anybody can register a DBA. So there can be 50 John Lemonade Stands registered as DBAs in the state of Missouri that have free use of that name. But a DBA or fictitious name can be helpful if you would add additional business segments. And so, Dawn, to kind of answer your question, there's a few options that you have to change your business structure or your business model or what you're offering without changing the name. You could keep the LLC's name the same, add some fictitious names in and use those, or you could file an amendment to change the business name as well. That is an option. Or you could kind of pick a blanket LLC name and then use fictitious names for the different segments of your business. Now, one last thing I'll mention, Dawn, when you register your LLC, the only place where you describe what your business does is the purpose statement that you create. Typically, when I help clients with business registration, I use a generic purpose statement that comes from the Secretary of State site that says that the structure, the nature of this business is to do any legal business that is legal here in Missouri. So you can do anything that's legal in Missouri. So that's kind of how I structure my purpose statement, so that if you change the structure of your business, nothing needs to change anyway. There's no amendments that need to be filed unless the name indicates exactly what the service is. So you have a few options of changing your business structure, Dawn, without changing the name. Hopefully that answered your question. You don't need to reserve a corporate name, so I won't really go into that. Protecting your name, there is a lot that goes into protecting a name. However, one thing I'll say is you want to make sure that your LLC's name is not already taken, and there is a way to search for the LLCs or business names within the Secretary of State's website as well. All right, let's run through these last few steps really quickly about registering the business. So let's talk about registration and getting legal. So once you've selected your legal structure and legal form of business, whether that's a sole proprietorship, or if you have a sole proprietorship, you don't really need to do anything. But if you have a limited liability company, like I said before, the cost of that is $105 if you go to the office. Please don't. And it's $50 if you do it online. What you receive is something called your articles of organization, which is essentially your LLC registration paperwork. If you are a corporation, your corporation has fees that are based on the amount of authorized capital that your company has. And so, like I say, it can get pretty pricey there. And there's also some additional filings that need to be done for a corporation. If you are in a certain profession, like a doctor, a CPA, massage therapist, there are other various state registrations from the Division of Professional Registration that need to be had. But I actually have a small business resource guide that I can share that has a link to the list of different professions that need additional registrations as well. Taxes. So taxes, accounting is an area where you can get support, but you want to also always have an expert available, because taxes is where you can get into murky waters with really personal and business taxes. But the nice thing about an LLC is that it really doesn't change much of your tax situation, because the profits or any of the income from your LLC just passes through that veil into you directly. But if you are going to register an LLC, one of the other components of registration that you'll need on the federal side, or really the only federal registration you'll need, is a Federal Employer Identification Number, or EIN. That number is seen as the Social Security number for your business, and that's how you identify your business to the federal government, really specifically the IRS. And if you've ever gotten a W-2 before from an employer, that number at the top right of your W-2 is the EIN for the employer. Sole proprietors can use their Social Security if they don't have employees, but if a sole proprietor, really you shouldn't be operating as a sole proprietor, but if you are, you can still get an EIN number. But to get a business bank account, usually the bank is going to want to see your EIN number and your articles of organization as well, which is your LLC registration paperwork. So you have your EIN number. You do want to start to estimate and pay quarterly taxes for income if you expect to owe tax of $1,000 or more when your return is filed. It just makes it a lot easier versus paying a large tax bill at the end of the year. Same thing kind of with your self-employment taxes. Excuse me. When you work for somebody else, typically about 7.65% of your taxable income actually goes to cover FICA, which is that Federal Insurance Contributions Act. But in your employer matches that contribution. So since you're self-employed now, you are really paying both that employee and employer contribution to those accounts as well. And I'm hoping that none of you all are thinking about getting employees out of the gate. But what happens when you get employees is that employees get pretty costly. And so I would highly recommend considering using independent contractors. But if you do have employees, you're going to be withholding and remitting federal employment taxes, also for Social Security. Medicare and federal unemployment. And so that adds another layer of complexity to your financial management as well. So if you are planning to sell a tangible good, or if you're hiring employees, you have to register with the Missouri Department of Revenue and obtain a Missouri identification number. And now they've made it a little bit easier to get your Missouri tax ID number. It used to be you had to pay a bond based on a percentage of your projected first month's revenue, but now you no longer have to pay a bond or any money to get your Missouri identification number. And if you are selling a product, retail, wholesale, you're definitely going to have that Missouri ID number, because what comes with that is your retail sales tax license, or your retail sales license. So that gives you the ability to collect sales tax, and will give you all the information and percentages you need to start collecting that sales tax. Also, when you're thinking about local taxes, whatever county or city you are doing business in and where the business is actually physically located, it's best practice to call those city and county clerks to check and see if there's any local taxes, registration, or anything that needs to be prepared in order to do business in those jurisdictions as well. So when you say, are digital products and services included in this sales license, digital products are typically not, but it depends. And so I could probably get a little bit more information from you, but digital products typically are not, and services are definitely not. So in that regard. Thanks for the question too. Now, lastly, as we wrap up and give you all a few minutes to ask questions, and I want to let Angela kind of share with you all the upcoming programming that they have available for at the library as well. Let's talk a little bit and wrap up about covering yourself and ways to protect yourself. Use this information to take the next steps in your business. And I talked a little bit about employees before, but if you are hiring an employees, keep in mind that you have to not only withhold federal income tax as well as Medicare, Social Security, you're also going to have to pay federal and state unemployment taxes, and these taxes fund the employment insurance program. So if you are hiring employees, best practice is to establish a payroll account, because mingling withheld payroll taxes with the ordinary business account can result in a lot of different accounting problems down the line if those payroll funds are used for other expenses. And if you are planning on hiring 5 or more people, you're going to have to get workers' compensation insurance as well. But I haven't heard from anyone in the chat who's going to be doing a bunch of hiring, so I won't spend a lot of time on this. Because Missouri is one of those states where you have a lot of flexibility on using independent contractors. And an independent contractor is someone who has a little bit more autonomy over the work that they do, and they are workers who are not directly that work on a contract or project-based basis. So there is a full document with a list of questions on how to determine if you are an independent contractor or employee, and that is something to consider. If you're having someone show up to do the same task for the same amount of time and materials with no autonomy, then they actually are an employee. They're not an independent contractor. But Missouri is one of the looser states for independent contractor use, and you hiring or using an independent contractor allows you to not have to collect any taxes for that contractor, and all you have to do is provide them a 1099 at the end of the year describing how much you paid them for their various work, and they have to pay their quarterly self-employed taxes. So it simplifies it down for you. Business insurance. Insurance is another important issue, or another important thing to consider. By law, there are various industries that require business insurance, but most times, in most cases, when you're starting single member LLCs, there's not going to be large levels of insurance you're going to need to be legal. But examples of insurance you may need include work compensation or even unemployment insurance, which is paid to the state. Or if you're landlord, maybe if you're renting an office space and they require insurance. So the best practice with insurance is to first start by categorizing your risk. Think about what needs to be insured within your business, whether that's intellectual property, capital, equipment, what needs to be insured, and then to discuss your needs and your different risks with an actual business insurance agent. And I do have some referrals for those if that's something you all are needed and interested in as well. So best practice is to speak with an insurance agent and professional to help kind of analyze what risk you have that may need to be insured or may not. Same thing with intellectual property or IP. Several different types of intellectual property. Trademarks, which are the commercial source. Those are your words, your logos, your symbols. Your copyright, which is those protected works or creations of an artist or a writer or illustrator. And then obviously patents, which apply to inventions and are acquired by businesses to protect a new product or some type of component of a product or service. Now, if you're concerned with IP, same thing as insurance. We can talk about IP, but it's always going to be best to speak with a qualified IP attorney, because what happens, especially with patents, is patent searching can become very, very challenging because you search for it in one spot, but that's not the only place that it could be. And just dealing with intellectual property law as a whole is very, very precise and refined. And so we highly recommend also speaking with a professional when looking to protect your intellectual property. Now, wrapping it up, I want you all to start thinking about your bail team. I know it's obvious by now that even though you're responsible for everything your business does or fails to do, you don't necessarily have all of these different expertise in these areas. I know I sure don't. So you need a team to help you and support you. So at the minimum, start to think about your bail team now. And your bail team is going to stand for your banker, your accountant, your insurance agent, and your attorney. And all of these individuals will provide you advice from their area of expertise, but you're the one who's going to be making the sole decisions about the business, the final decisions about the company. But you want to start to develop that bail team to help you keep from paying a lot of those dumb taxes or helping you save some money, time, and effort in your small business development. You also want to find a mentor, a person who's kind of been there, done that. It could be someone in your industry or someone who just has general business information. You already have a business counselor that you're speaking with now. And then also finding those accountants, accountants and engineers or contractors that are going to help you and support the business as well. Record keeping, please, please, please. I just keep this slide up here just to say, try not to commingle when you do register your LLC, your business funds and your business account with your personal account. That can eventually void any liability protections you have with your LLC. So please, please open that business banking account. If you need assistance with that, that's something I can definitely help you get prepared for. And make sure you are adopting an accounting system, whether that be as simple as an Excel spreadsheet where you write down everything you spent that week and everything you made, or QuickBooks. You need to have some type of accounting and inventory system for your business to have the best chance at success. And I think that is all that I have for you all today. And I will kind of open up the chat and Q&A for questions if we have any. And while you all are writing those in, or if you have any questions, I'm going to type in my email address here so that you all have my contact information to contact me to potentially get any copy of the slides. Oops, that's my name. Or any of these additional resources that we talked about today. And I thank you all so much for joining us.
Amina, while people are thinking of questions, I'll just thank you so much for your presentation. Just always so thorough and informative. So we really appreciate that.
Thank you, Angela. And I will turn my screen share off here. And then I know you wanted to briefly kind of give a preview of some upcoming programming this year.
Yes, I sure do. And I will share this while if people are still trying to think of questions that they'd like to be able to ask. Just again, thank you for attending this presentation today. Some of the upcoming programs that we have remaining for the month of January, we have one tomorrow, selling your product to the federal government. On the 20th, take care of you and your small business too. Demographics 101 on Friday, January 14th, finding grants and donors on the 24th of January, and then the 25th, reference solutions. We have a presentation from the actual company from noon to 1:30 p.m. So as you can see, we have just a variety of opportunities that patrons can take advantage of related to small business and nonprofit.
Thank you so much, Angela. And I'll really quickly, I see a question from Sandra. What's your opinion about foregoing salary wages during the first couple of years establishing an LLC? I say that typically I don't think that, it's not always my recommendation to completely forego wages, but for me to really make a recommendation on that, we would be able to answer that question through creating financial projections, which will start by identifying, well, what is your profit margin? Or first of all, are you even profiting at the end of year one? And if there is a profit, how much is left? And then from there, we can kind of create a feasible percentage for salary versus investing it back into the business. But I say there are times where you are able to start a part-time business. And if the business is part-time and you're still able to take care of yourself with your living wage, I don't say it's recommended necessarily to forego the wage, but it's not necessarily the worst thing in the world to not necessarily make salary from a part-time business in the first couple of years establishing an LLC. But I would want to do some financial analysis to kind of determine what the actual numbers are before we kind of made any decisions or created an opinion on the salary and wages. Bruce, the video and slides will be available. If you can send, or I can send those to you, Angela, as well. I can send the PDF of the slides to you, Angela, if you want to send it out to everyone, so I can have Angela send that out to you guys. And if you're interested in any of the other resources or tools to accompany the slides, I put my email address in the chat there, Bruce. Feel free to send me an email, and I can get you everything you need to get started with that as well.
And also we can have the video available on the St. Louis County Library's YouTube channel as well for everyone.
Great, great. And I think that was all that I saw in the chat for questions. Thank you all. Oh, okay, I see one more coming here from Dawn. So the SBA, we do have some support for women in business. There's actually several SBA programs that I can kind of share with you and give you some information on for women-owned businesses. I don't know what we have for in non-traditional gender professions, but I can do some research for you and find out. And thank you for that question, Dawn. And I think that was all I saw in the chat. And so, Angela, I will send you the slides for everyone. And I see that someone is asking for the website to sign up for webinars. And I don't know if you have that link for you all. I know typically I just do a Google search, St. Louis County headquarters programming.
Yes, I was just going to say, definitely everybody can go to our website, stlouiscountylibrary.org, to be able to sign up. We also encourage everyone to book an appointment with one of our reference librarians, where you can get more information about our small business and nonprofit resources that we have available as well. And Amina, thank you again. And thank you also for making sure that our patrons do know that there are many resources available for their small business and nonprofit needs here at St. Louis County Library. And we just thank everybody. Thank everybody so much for joining us today. And we hope to see you later in the month to join us for additional programs. Everybody have a great afternoon, and thanks again.
Talk soon. Bye-bye.